Hey guys, this is White Tiger. I recommend watching this video at 2x speed. Some people in the Discord asked me to make a video on my macro thoughts on XRP and also on moving to Puerto Rico and giving some insight to that. I'll have a Puerto Rico video in January. I'm leaving to the Galapagos for a couple of weeks, and when I return, I'll do a video about that. But in the interim, I'll talk a little bit about XRP, macro thoughts on this, and how to think about charting something with this kind of setup. So first, I just want to mention something. A lot of people on YouTube do bullshit stuff that I would call bro science. You know, let's say like, oh, from the lows to the highs, it took this long. So lows to the highs, 323, like, you know, oh, we should see these highs in late 2023. You know, that actually means absolutely nothing. There's no truth to that. In a lot of charting, you could use fib time extensions, but most of these studies that talk about them, there is actually nothing really proven behind it. I like to stick to what I know works, which are fibs, RSI divergences, triangles. So let's just talk about this. This is your first range, and this is your second range. And essentially the reason anyone is investing in XRP, besides the tech, unless you're someone who's actually going to use the tech, when you buy a crypto like ETH or XRP or whatnot, you either buy it to use it or you buy it as an investment. If you're buying it as an investment, you're not buying it to sell within this range, you're buying it to sell in the third range. So these are the two ranges. We call this range 0 because that's where you start. This is range 1, and we're going to go to range 2. And to give an example of another ticker, Tesla is always a great example of this. So Tesla has 3 zones. It traded in zone 0 for a good amount of time in the beginning, about 2 years, until it had its breakout. Then it traded in zone 1, I would call this. This used to be actually in the hundreds. They had a split in their stock. It traded in this range for about 7 years. And then we had the markup, the final markup, and then this bubble recently. And this is not complete, so I don't exactly know where this range will end. It may just end here, and then the range is actually this area. But within these gaps and markups, it's pretty similar in the same realm of how XRP is going to trade. So back to XRP. Let's look at the fibs. So obviously, since this is under $1, the way we would do fibs is a little different. I would not use fibs under $1, like using 1 cent, 2 cent, 3 cent, etc. Although 89 cents is a very strong fib level, and not just in XRP, but in quite a lot of tokens that I have traded. So let's go here. Looking at the fib retracement from range 0, you can see that it hit the 2.272, and actually really the 1.618, this is the main golden ratio that I mentioned before. And this would be your target for most things that you trade on log or semi-log scales. It's typically 1.618 is your main target. 2.272, that is quite interesting that it went that high. You know, it came back down. It did not breach the 1.272, and if you look at Bitcoin did the same similar thing in its first markup. It did not come back below the 1.272 level. A lot of you will say, well, you know, White Tiger, look, it breached it. Breach does not mean it actually went below it. These are just wicks. If the candle actually closes below for a certain period of time, I would say that's a breach. This is a weekly, these are essentially wicks, and that doesn't exactly count. So anyways, back to here. If we focus here, this golden ratios, when it trades below, it's quite bearish. So during this period of time, if I was trading XRP, I would be actually quite bearish on it the whole time. And every time it hit, it was rejected. So this is about 6 rejections. 1, it breached, came back down. 2, 3, 4, 5, 6 rejections, I would call that. And support around this 0.236 level. And after this breach here, it went on the actual run that we all know. If we take these fibs off and we look at the triangle itself, this is a classic ABCDE triangle. And essentially what this is it's decreasing volatility. And this decreasing volatility, basically, if you think about it as like a spring effect, or like a pump shotgun, or those Nerf guns that you had when you were a kid, you know, if you keep pumping it and pumping it and pumping it, eventually it's going to explode. And that's essentially what happened here. All of the sell orders get eaten up, and then eventually there's no more sell orders in this range, and all the buy orders have to go up if they actually want to purchase the token. And so what you're hoping for is somewhere around here, eventually all these sell orders dry up, and when utility comes in and enterprises or banks or whoever would need to use the token must purchase the token, then the price would appreciate based on necessity. So if we look at the current triangle we're in right now, we have an A and a B. This is a speculative C. We do not know if we are actually going to come lower. If we look at the fibs, we are trading below that 0.382 level, so it's quite bearish actually for price action. The other thing I want to mention is the Elliott Waves. If anyone actually uses Elliott Waves to predict where the price will go, that's on them. I am not a firm believer in using Elliott Waves for future price prediction. Elliott Wave theory, remember it's a theory, it's not proven, is useful to look at where we were in the past and where we were are positioned currently. It is not useful for figuring out actual price targets. That's more for Fibonacci analysis and different types of technical analysis, which I can get into in another video. But the purpose of Elliott Waves is to essentially understand, look, this is how this specific chart has functioned. This specific chart has functioned where the main cycle 1 has been complete. And we were going for the main cycle 3. And everyone knows who studies Elliott Waves, the main cycle 3 is typically the longest and most profitable cycle. And I just want to mention one other thing here in regards to the speculation of a lot of YouTube personalities who suspect that, oh, because of the fib retracements, this 1.272 and this 1.618, that XRP will be somewhere between the $8 and $26 range. I would say to that is half accurate and half not. The reason it's half accurate is because, yes, that is typically how we use these retracements to generate targets. However, I would almost denote XRP is a slightly different beast. If you actually pull the fibs up, this $8 is probably going to be a large magnet, and same with the 13, them being both fib numbers. However, 26 I do not think would actually match a big range. I would use the earlier retracement and continue this because it could technically be a larger cycle here. And if it is a larger cycle, really the target I would think about is more of this 89 potentially. This is all speculation. None of this is financial advice. But that is pretty much this whole area, this blank space here is where you're looking. And when I'm pointing here, I am pointing to these years because without regulations, without the US liquidity jumping into utilizing XRP for its use case through ODL and Ripple.net, it probably will not ever reach those levels because it requires quite a lot of liquidity. Oh, and then that reminds me of the second point. When people refer to all the money, the liquidity and how it's used through ODL does not actually require that much XRP to move quite a lot of money. So for example, if you needed to move $100 million, you don't actually need $100 million worth of XRP, because you can do it in smaller increments at extremely fast settlement times, because remember, this is T+0. So maybe you would only need $10 million worth of XRP to move $100 million within less than a minute. And that correspondent bank using ODL would just borrow it. And when they would borrow it, they don't actually need to borrow the full amount. So to think that the market cap of XRP would need to be, trillions of dollars is inaccurate for the idea that ODL would require it. That's not exactly how it works. The way price would appreciate is essentially the order book. The way price appreciates in anything is order book, buys and sells. And what that requires is liquidity. So ODL would increase the price not because of the amount required to move the liquidity, but for the liquidity itself to come into the XRP market. So you actually have to think a little backwards in this rather than forwards. So backwards induction is necessary, not forwards induction, with trying to estimate the price. Okay, so I do want to look at the RSI real quick. Let's pull this up. One thing that I have not really liked here is that the raise in prices here had a lower RSI, so we had some bearish divergence, and of course the price followed. However, the increase in prices in the last few weeks, or I should say a couple months since June, has not seen a decrease in the RSI, and we have not had a divergence here, which leads me to believe that there probably is going to be a lower low set here. And if we look at these fibs, this lower low is likely to come to this 25 cent area. It does look like there's a lot of liquidity in this area that would like to come in. If you especially look at the prior to the run up before the SEC lawsuit was filed, that was a key area. So I would suspect that if this does come up to the 41 cent area, it would get knocked back down potentially for one last run. That would be your C. We come up for a D and then an E, and then you actually go off. And then in terms of timeline, you cannot exactly predict time here. Time is not something that you need to predict. What you need to predict is simply the analysis on the chart itself and whether the chart is bullish or bearish. And this chart is extremely bullish because you have a range 0, a range 1. There's no large scale bearish behavior here. This is just simply a triangle trying to form, and the triangle is taking quite a few years. I suspect this could even take a full other year or a year and a half before it actually would come into the next range. So I hope that's helpful with how you should look at something like this. In the macro, I just wanted to mention something with Bitcoin. So let's pull Bitcoin up very quickly. And essentially all I wanted to do and mention here is we have seen a bullish divergence here with Bitcoin, with a rising RSI and a decreasing price. So this does tell me, and this is on the weekly, so note other time scales such as monthly and 3-day and daily, but I follow the weekly quite a lot, and this to me shows that we have probably bottomed out for Bitcoin. So I would anticipate the Bitcoin dominance to increase as altcoins falter. If I look at if there's any divergence here. There is no divergence here. And again, back on XRP, there was no divergence. So I do think we see altcoins falter, Bitcoin up in dominance, holding its price well against the rising RSI. I do understand that there's FUD out there about Grayscale, about Binance, et cetera, the miners capitulating, but most of these cells are already gone, and a lot of this Bitcoin is held in cold storage. So if it falls anymore, that would just be greater divergence. So just expect an even greater recovery to occur. Lastly, talking about the settlements and the lawsuit with the SEC. Obviously you can watch John Deaton and Jeremy Hogan discuss their legal opinions and views upon this. My opinion is a little biased. Full disclosure, I do own Ripple private shares. And I think the end of the lawsuit will actually bring great appreciation to Ripple private shares in the company. However, I do not anticipate a great a markup in the price of the token XRP. Yes, there is the argument that exchanges will relist it, which will add liquidity. However, the amount of liquidity from retail and even from the US exchanges, I do not believe will actually create a large enough markup for this to break this B wave here. I would anticipate a slight markup, maybe to the 90-cent area where that golden ratio was, and then back down. Maybe that will form if this was our C, our D wave, and then come back down for the E before we go back up. In terms of when I think the settlement will occur, I believe March was the kind of deadlines for when that trial would need to ensue. Remember, right now it's just questions of law, so it's just summary judgment, but if we go into questions of facts, we will need to have a trial. And so this could last. The other thing that I'm watching, and you all should watch as well, is the war in Ukraine. That is pretty much why the Dow Jones is slightly faltering through this last year, as the rise of interest rates was the quickest rise in history. The interest rate hikes are due to many issues, including ensuring that the Russian ruble is extremely weak. And I do think that once the war is over, you will see the Fed start to mark down on the rate hikes and actually start decreasing it back to QE because they can't handle the rates at this level for an extended period of time. The amount of debt that is accumulating upon our balance sheet will be too great for them to bear, and the repo markets will be very, very difficult for the treasuries. You're already seeing Japan and Britain start to sell U.S. treasuries to backstop the pound and the yen. So we'll see what happens. Yeah. Hope you had a awesome time with your feline friend, White Tiger. Don't forget to scratch the like button, leave a meow in the comments, and subscribe for more wild content.